Right now, let's take the discussion on markets forward with Ishmohit Arora, who is joining us from Soic. Ishmohit, of course, works with retail and HNI investors across the country and is more of a stock picker than a sector guy. But today we'll start a discussion. Ishmohit, first of all, thank you very much for chatting with us. I remember the last time you were there on our channel, we were discussing battery stocks and the storage angle of the EV or energy transition space. And then onwards, we saw the way Amara Raja Exide got completely re-rated, big reports of targets coming in and some tie-ups also came in. So you were one among the early spotters of that theme, so congrats once again. Before we move forward, a quick update on that. Is the story still left to be factored in or mostly it is now in the price?
Right. Thank you so much for hosting me, Ajay sir. So one thing to be said is that in a lot of those businesses, these are just sunrise industries, and how the EV ecosystem gets created in India is remaining to be seen. But I think in over there, we just need to track how many new capacities are being announced, because one of the large battery players already has capacity on the ground. The other large battery player has applied for a PLI, and it remains to be seen how large of a capacity they are going to set up. But definitely these are sunrise industries, and one must always study sunrise industries even if you're a bottoms up stock picker.
Right. Ishmohit, okay, let's take the discussion forward and electrification or electricity theme. I want to talk to you more about that. Again, part of transformers, wires and cables, some of the power generating companies, including legacy and new age, got re-rated already. How are you reading this electrification theme now with new data points coming in? Which end of the value chain are you playing this theme from?
So basically, Ajay, how we are looking at such stuff is, so actually there's a broader thesis how the market cycles have shifted, is that the cycle has gone from asset light businesses to asset heavy businesses. So, because all over the world we are seeing there's a pickup in inflation over the last 2 to 3 years caused by supply shocks, right? Too much of printing of money and etc. etc. So, what happens is that asset heavy businesses in such an environment get pricing power. So pricing power में क्या होता है? Because see, if you already have an asset heavy business, so what happens is that cost of replicating such assets is also really difficult when in an inflationary environment. And as these businesses get pricing power, so we'll see across the sectors, whether it's a telecom, whether it's a hospital, whether it's a power sector, whether it's a metal sector, whether it's a hotel sector, all these sectors have one thing common about them, is that all these businesses are asset heavy, and it takes a lot of time to basically replicate these assets. And all these assets currently have pricing power with them, so they're sitting on operating leverage, financial leverage, and you'll see like non-linear jump in profitability. Now coming to the theme of electrification, where it fits in over here, is that, so if you read the recently, I think day before yesterday, there was a draft document by the power ministry which was released, and it says that there will be a 4.5 lakh crore capex on power transmission, which is expected between FY23 to FY27. And by FY30 also, this capex on power transmission will continue. And Goldman Sachs came out with a report that it is expected that by FY50 there will be almost a $500 billion of power transmission capex. So here there are multiple players. So especially the capex in extra heavy voltage pie of the value chain will be much higher. So here there are players which are available right from conductor space. They're absolutely dominant players in conductors to players within cables and wires. And then there are also companies which are into which are monopoly over the power grid itself. So all these players will likely see pricing power basically benefiting them. And because we are in a positive cycle for these industries, and these industry cycles are a bit long dated in nature, that we have to realize, because last time we saw such a cycle between '03 to '08, '09, right? And that lasted for 5 to 6 years. Currently, we have seen the starting of the cycle from 2021. Yes, some of the stocks have run up, but what we need to realize is that bottoms up, there are still a lot of opportunities which are over there. Where I think if you look at the PEG ratio, sometimes the PEG ratio, even in some of the businesses, is still below 1.5 to 1.7 times. So as a stock picker, you need to de-anchor yourself from the stock price, and you need to anchor yourself with the value and the growth of these businesses.
Ishmohit, let's shift focus and talk about, since we are talking about cycles, where are we as far as the real estate cycle is concerned? A lot of stocks have done well, volumes have already done very well. Are we in the middle of the real estate cycle? How are you playing among the real estate stocks? Are you playing via the top tier category A builders or the mid tier ones? What are your thoughts on the category of stocks you like?
So in real estate, again, we are again coming back to the long dated and short dated cycles. So this is a sector which has again started doing well after 2008, 2009. We have seen almost a breakout on the Nifty Realty Index itself. So data wise, like the organized real estate players in quarter three had grown their pre-sales at a rate of more than 40%, even though the industry overall has grown at 8 to 9%. What this signifies is that the organized real estate players or the listed real estate players are actually gaining market share. And as per my understanding of this cycle, some of the national developers, whether one of the like some of them are based out of Bangalore and now they are going to Hyderabad, Mumbai, Chennai and Delhi also, some of these national real estate developers will see a consolidation that we haven't even seen in the jewelry industry, because smaller players just don't have the balance sheet heft to take larger projects. And now everyone wants like a good apartment to live in, or a like entire townships are coming up. So that requires a lot of balance sheet heft and an ability to raise capital. So unlike other industries where smaller the player the better it is in tailwinds, in real estate you have to be opposite. The larger the player the better it is, because they have the more balance sheet heft, muscle power and the brand power with themselves. I think one of the businesses is based out of Bangalore, which is now currently going through a buildup of its annuity portfolio. And if the annuity portfolio comes in, so combined that business has a higher pre-sales and DLF and Loda as well, like I think in FY24. So these type of opportunities we are looking at. I think we are still somewhere like maybe 2 years into the cycle, and these cycles in the past have also lasted for 5 to 6 years. So these are some of the sectors we are tracking bottoms up, Ajay.
Let's also scratch that point you're making, that this is the time where you should have more asset heavy stocks and sectors which are represented in your portfolio than asset light ones. Why exactly are you making this point, and is the earning visibility higher in asset heavy names?
So that's a very wonderful question. So actually, in a lot of asset-light businesses, if you go to IT services or if you go to the classic FMCG businesses, what has happened is that, like suppose if you talk about the FMCG category, is that a lot of those categories are fully penetrated. Like you can't keep using 4 or 5 soaps in a day. You can't basically brush your teeth 5 times in a day, right? Similarly, you can't keep popping you can't have Chavanprash 4 or 5 times a day. So those categories are fully penetrated, and because they're asset light in nature, and along with IT services, currently in IT services there are headwinds which they're facing from the developed world. So in asset light businesses, this is a problem that we've been noticing top down on an index level. When it comes to asset heavy names, so first thing to realize is that in an inflationary world, cost of replication goes up really high. Now just to give you an example of the hospital sector, so today, if anyone wants to set up a hospital, a greenfield project in a city like Noida, Gurgaon, or anywhere else, minimum for a 400 or 500 bed project, they need to spend 500 to 600 crores, right? And this amount used to be 60 to 70% of it like 3 4 years back. So again, the remaining the increase in amount is because of inflation. So the incumbents which are there in the hospital space, whether it's an affordable healthcare chain from Bangalore or all these businesses, they've already established their centers, because for a greenfield project to break even, it takes 6 years. So for someone to throw in money today at an inflation adjusted price and to sit for 6 to 8 years for the project to break even, it's a really painful period. This is why the incumbents in some of these industries are enjoying a lot of advantages, and during such periods of inflation your cost of services also goes up. So you get pricing power. If on the same asset I'm able to earn higher, what happens? Leads to margin expansion, it leads to financial leverage, it leads to ROC expansion, it leads to ROE expansion. So all those financial ratios basically start matching up with the macro analysis of the industry.
Right. One last question, if I could understand from you, because you keep meeting a lot of companies, especially from mid-tier names. Ishmohit, are you getting confidence of visibility on earnings growth front, or are these companies sounding a little wary of the trajectory from here on?
See, some of the businesses we are tracking bottoms up. The managements are like really bullish like at the moment. They're saying all of them are saying that the that government has really incentivized manufacturing and incentivized creation of an ecosystem in India. Just to give you one more small example, so there is a stainless steel pipe industry that we track, and government in 2021 enforced a 5-year anti-dumping duty, because nearly 40 to 50% of the industry volumes were being imported from China, and now there is an anti-dumping duty on Chinese imports. So what this has led to is that a lot of domestic players are expanding their capacities by 2 times, 4 times, 5 times. And over last 2-3 years, some of those companies have gone from 200 crore top line to almost 800 crore top line, and they're talking about 2000 or 2500 crore types top line. So that just shows you that how an ecosystem is being created. And maybe this is a time where earnings growth for next 2-3 years remains to be solid. And this is what the market is also telling us in a way. If we listen to the market, if we listen to the businesses bottoms up without worrying too much about कि आज market का क्या आएगा, कल market का क्या आएगा, but if you keep reading businesses bottoms up, so growth is very broad based this time, instead of just being focused on 5 or 6 names which happened in 2017 to 2018. And this is also a cycle which will last for maybe 2-3 years, and then the cycle will again turn.
Right. All right, Ishmohit, we'll let you go on that one. Thanks so much for our inputs this afternoon.
Thank you so much, Satya.
If you like this video, then like, share and subscribe to ET Now.